Welcome back. That's the SGX Nifty indicating that we'll not only gain back what we gave up yesterday, but add some more, 17,130, and who knows that 17,200 mark, given the amount of shorts that we have in the system and that they would be in trouble first thing in the morning. There could be an interesting day today. We have Dipan Mehta joining us, Director at Elixir Equities. Dipan, hi, good morning. Thanks a lot for joining us. The market's become very volatile, but largely, it's still a resilient market, the Indian market, and banks have been doing well. Your thoughts on how to approach it incrementally?
Yeah, good morning, Anuj, and thanks for having me on your show. You're absolutely right. I think banks have regained leadership position, and for the right reasons. Absolutely, I think we've seen the early commentary coming from the sector and some of the banks, and that is extremely positive. We are seeing very decent net interest income growth rates as well as increases in net credit also. And of course, the credit costs are going to remain pretty much under control for this quarter. So we're looking at a very good earnings season for the banking sector. As regards markets, you're right. I think it's showing a great deal of resilience. Partly it's to do with expectation of a very good earnings season on the back of a very good festive season as well. So let's just keep our fingers crossed. I think if this earnings season is decent as per street expectations, we could say that then we're completely out of the woods so long as US markets do not fall further from these levels also.
Okay. Dipan, hi, good morning. It seems like people are shopping a lot more. I mean, look at the Avenue Supermart's numbers, right? Record quarterly revenues, almost a 40% growth there. The stock, how are you feeling about it? Is the risk reward still favorable for investors?
Yeah, good morning, Sonia. Absolutely, I think. And the way they've been expanding their stores and the footprint which they have created, and further the fact that they can even grow this beyond these levels as well, means the potential for the stock for the next 2-3 years is exceptional. At the same time, I think amongst the organized players, a lot of consolidation has taken place. Future retail is no longer a major player. So there are just 2 or 3 of these players in the hypermarket segment of retail, and Avenue Supermarkets is one of them. So, and also we are seeing the shift away from unorganized to unorganized as well. The only real, I would say, fly in the ointment is the way these online companies like Big Bazaar and all, how they are trying to get into the space of Avenue Supermarket, and how the competition from that will shape up is a bit of uncertainty. But nonetheless, I think despite reasonably high valuations, we're very positive on Avenue Supermarket. It can continue to grow at 25% for at least 3-4 years, and that would mean a solid compounding story.
Okay, solid compounding story. What else, Dipan, you think financials are the best? I mean, if we get a bit of a risk-on move from here, a continued move, are financials the best place to kind of latch on to? Or you think there could be others which participate equally aggressive? Tech, for example, IT services. Last night, we've seen a pretty large move on the NASDAQ. Your sense?
Well, Prashant, I think you have to have at least 35% of your portfolio in banks and NBFCs if you expect to beat the sensex nifty returns. And this is, I would say, amongst the golden period for the banking sector. You have the best of both worlds where costs are low because of low provisioning, and net interest income and fee-based income is going to go up because of higher credit growth rates. So it's going to be a great time for banks and NBFCs. You can pick and choose depending upon your risk appetite and your experience with these stocks in the past. Apart from banks, I think we spoke about retail. Across the board, retail looking very interesting. And so many of these new listings, I think, really need to be watched quite closely, like Vedant Fashion, which is Manyavar, Metro Brands, Go Fashion, which is Go Colors, and even to an extent, I would say Ethos. I think all of these new retail listings could be quite interesting. They are at a slight discount to existing retail companies like, say, Trent or Avenue, or for that matter, some of the other Aditya Birla Fashion. And they are growing at much faster growth rates. They have a short listing history, so that's a bit of an uncertainty. But they are solid players, very good market share, strong balance sheet, able to expand their network without taking on any debt or so. So that's where we are focusing on as far as our new investments are concerned.
Okay, well, we have plenty of other stocks to talk to you about, so we'll come to that in just a bit. But before that, just a quick word also on, some more stocks that have been in the news. Hindustan Zinc has seen an 18% growth in its saleable products, both on Vedanta and Hindustan Zinc. And that entire pocket. What's your view now?
every rally is a reason to sell metal stocks. I think that metals will not outperform over the next 2-3 years. It's going to be the year. It's going to be the years for the metal consumers, and that's where we need to focus on engineering, construction companies, real estate companies, automobiles. I think they're all going to do exceptionally well as compared to metals. So I would avoid all metals at this point of time.
All right. Dipan, just stay on. We'll come to you in just a bit. We have a big voice joining us now.